Street has thousands and thousands of bankers and research traders, everybody, and hedge funds dedicated to these other countries. This is going to start to focus on crypto. And the third reason is that as a portfolio strategy, crypto is uncorrelated alpha. Now, what does that mean? Take a look at this. If you look at each of those lines at the top, that represents the correlation of Bitcoin to stocks, which is blue, to bonds, which are red, gold, which is gold, and hedge funds, which is light blue. Bitcoin and crypto are uncorrelated to other markets right now. It is uncorrelated. That is almost a holy grail for portfolio allocation. And to understand why this matters, the bottom line on that chart is if you had a typical 60-40 bond equity portfolio. The line just above it is if you put 2% into Bitcoin. Your returns would have gone from 6% to 8%. And your drawdown would have actually been smaller, and your annualized vol is lower. Bitcoin reduces your portfolio volatility, believe it or not. And the top chart, that blue one where it went stratospheric, is a 5% allocation. So what we're saying is you don't need to bet your firm on crypto to see uncorrelated alpha.
And that's just an absolutely amazing revelation. And it's just something that a lot of people don't grasp, that there's ways where you can actually be you can introduce more risk in your portfolio, but because of how things are correlated with one another, make your overall portfolio less risky. In the last podcast we just did, actually I just released it today, which is April 2nd, but I made it on March 22nd for my existing clients, or for my clients who were with me before. And I really went over that in a little bit of detail. And for those of you who are listening to me right now, what it shows is you have somebody that has a 60% in stocks, they're 40% in bonds. It's very typical what you see of your average retiree. And what it's looking like is, their average return was 6.47, their volatility was 7.38, and their max drawdown was 7.9. Now we introduced somebody that instead of having 60% stocks, they had 58, and they also had 40% in bonds, and then they put 2% into Bitcoin. And what we looked at now is instead of at 6.47, now they're actually at 8.73. So over 2% better year over year. And the volatility went from 7.38 down to 7.32. And the drawdown went from 7.9 to 7.2. So it's actually was showing that you can introduce Bitcoin into a portfolio in this manner, and it actually decreased the risk in the portfolio, increased the return, and decrease the max drawdown. Now there's two other examples here where it showed a moderate allocation. So they used 55% stocks, they kept the same 40 in bonds, and then they used 5% now in Bitcoin. And so now it showed the growth rate going all the way to 12.14% per year. The volatility was at 7.8, so not too much difference volatility, and the max drawdown was 7.4%. So again, the max drawdown in the typical 740 was 7.9. Now it's 7.4. So actually it was less than the 60-40 portfolio, which is pretty crazy. Now the last one is a Bitcoin plus what they call crypto 10. So it's sort of like creating an index of the top 10 cryptos. So they put 5% into that, 5% into Bitcoin, the same 40% in the bonds, and then 50% into stocks as opposed to 60% in stocks. And what we're looking at now is the actual year-over-year return was at 19.22%. The volatility was 9.54. So again, that was more volatility than before. And the max drawdown was 8% as opposed to 7.9, where, again, 7.9 was your typical 60-40 portfolio versus 8. I would say that if you are about to retire, that there's no reason you should even be in bonds unless you're going to have some type of strategy that says, we're going to be really conservative, we're going to hope everything crashes, and then we're going to go from this really conservative asset to something else that's more risky. But what I'll tell you right now is that I started my career the day the market crashed, and try convincing people to do something that is completely counterintuitive to everything they've ever been taught before. To try convincing somebody to invest in the real estate in 2000. Thank you for listening. You can find the entire podcast at thelibertyadvisor.com, where we regularly update our listeners with all things relating to the market, retirement, economics, politics, and of course, crypto. That's thelibertyadvisor.com.
A good friend of mine, Tim Pachote, he's a financial advisor at Scottsdale. He's going to be speaking at the TDV event. You'd be able to bring the crypto into the system. How would you be able to do a foundation of trust, of this, of that, and so on? And well, Tim was at the party, and I go, Tim, what up? He's been spending months that he's getting ready to present to you guys Monday on how you can take your crypto and not pay capital gains on it, not have taxes on it. I'm going, man, you need to talk to Tim, okay?
Thank you for watching. If you'd like to gain access to my TDV investment speech, please register for a free limited time access to the presentation. Thank you.